Let me tell you something most personal finance gurus won't admit. Wealth isn't lost because people are stupid. It's lost because people get comfortable. They save, they invest, they build, sometimes for decades. And then one day, they slip, not in a massive, obvious way, but in a small, avoidable, emotionally charged decision that sets off a chain reaction. We're talking about that one investment that felt too good to miss. That one loan they thought they could handle. That one partner they trusted because they didn't want to seem paranoid. That one bad decision that ruined years of progress. And the scariest part? Most people never see it coming. Take Allan, for example. Worked his way up from nothing. Built a small real estate portfolio over 2 decades. But in 2021, he saw crypto exploding. Didn't want to miss the boat. He cashed out 2 rental properties and went all in on a coin that promised 10x returns. 6 months later, gone. The coin collapsed, the market tanked, and Allan's 20 years of patience vanished in the noise of one emotionally fueled decision. So today, financial enthusiasts, we're digging deep into the one mistake that can quietly destroy your finances and erase years of hard-earned wealth. And more importantly, how you can spot it, avoid it, and keep building while others fall. Stick around, because later in the video, you'll meet a billionaire who lost everything by making the same mistake as Allan. All right, let's turn the spotlight to another silent wealth killer. Confidence, the hidden risk multiplier. This one creeps in when you think you're untouchable. And that's exactly when the damage begins. Here's the paradox. The more successful you become with money, the more dangerous your decisions can get. Why? Because confidence starts whispering sweet lies. I've got this. I know how the game works. This time is different. And just like that, the person who once triple-checked every move is now taking risks they wouldn't have touched 5 years ago. One bad decision. That's all it takes. And the scariest part? It often comes after you've made it. As Warren Buffett once said, and it applies to both your money and your name, it takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. And the same goes for your finances. One careless move, and decades of discipline can disappear in an instant. Now let's apply that to wealth creation. 20 years of smart moves, smart budgeting, smart investing, smart discipline. Then one mistake, fueled by overconfidence, emotion, or pride, wipes it all out. But this pattern isn't just financial. It's human. This hidden risk multiplier, it doesn't just attack your bank account. It creeps into every corner of life. It happens to investors chasing the next big thing. It happens to business owners riding high on a winning streak. It happens to retirees looking for just one last big win. And yes, it even happens in relationships, where one impulsive decision can shatter decades of trust. Think about this. A couple spends decades building a life together. They raise children, survive hardships, build a home, and then one moment of infidelity, one decision made in weakness, one emotional lapse, and suddenly, 25 years of trust and love, gone. Because some decisions don't just cost money. They cost everything that matters, the same way one bad investment can collapse a retirement fund. One betrayal can collapse a family. That's the power of misjudged risk. That's why awareness is more valuable than strategy. Now let's dive into the story of Bill Huang, a billionaire who bet it all and lost everything. His fall wasn't about luck. It was about risk he thought he had under control. Bill Huang wasn't your average investor. He was the kind of guy who made Wall Street nervous, even when no one knew his name. Behind the scenes, he quietly turned $200 million into $20 billion through a private fund called Archegos Capital Management. No flashy headlines, no public company. Just silent success, until one decision changed everything. In 2021, Huang made a series of massive leveraged bets on a handful of companies. Using total return swaps, financial tools that allowed him to control huge amounts of stock without actually owning it, he went all in. From the outside, he looked like a genius. Banks kept lending. His wealth ballooned. Everyone wanted a piece of the action. But beneath the surface, his entire empire was built on borrowed money. He was playing Jenga with debt. And removing one wrong block would send everything crashing. That block came fast. One of the companies he was heavily invested in, Viacom CBS, announced a disappointing stock offering. The stock dropped. Then the margin calls started. And within days, $20 billion vanished. Just like that. Now, here's the chilling part. This wasn't a rookie mistake. This was a seasoned investor, a billionaire, a man with access to every resource imaginable. But he thought he had control. He thought he could outsmart risk. He thought one more win would take him to legendary status. Instead, he became a cautionary tale. Because when you don't respect risk, it eventually demands your respect in full. Coming up next in the one mistake that ruins your finances. I'll show you how everyday people, not billionaires, fall into this exact same trap. And the truth is, it's even more dangerous. Because when you slip, there's no safety net, no boardroom, no bailout. It's easy to hear Bill Huang's story and think, that's not me. I'm no Wall Street tycoon. I'm just trying to build my savings. But that's the illusion. You don't need billions to make the same mistake. You just need a moment of confidence at the wrong time. Let me introduce you to Michael. Mid-40s, steady job, no financial background. Started investing in 2008 after the market crashed. He wasn't flashy, just consistent. Little by little, he built a modest portfolio. Index funds, some real estate, a solid retirement account. By 2021, he had nearly $400,000 saved. A quiet success story. But then the noise got louder. Crypto headlines, friends making quick wins, Twitter gurus flashing Lambos and laser eyes. Michael felt it. That itch, that whisper. You're missing out. So he moved $250,000, over half his net worth, into a trendy crypto token that was going to the moon. No research, no risk assessment, just emotion and the belief that he was being smart. 3 months later, that token crashed, and so did Michael's decade of work. As Charlie Munger once said, the big money is not in the buying and selling, but in the waiting. Michael forgot that. He did everything right for years, but when emotion met opportunity, logic left the building. And that's how it happens. That's how one bad decision can ruin years of hard work. Not because you're dumb, because we are humans. Because it's hard to watch others win and not chase the same high. Because it's easy to justify risk when the reward looks irresistible. But here's the truth. Most people learn too late. The riskiest decisions never feel risky in the moment. They feel necessary, obvious, inevitable, until they're not. Moving forward, we're diving into a truth most people never hear. Your brain is wired to sabotage your money. And unless you learn how to break that cycle, it'll break your wealth before you even see it coming. Here's something no one likes to admit. Your brain wasn't designed to build wealth. It was designed to survive, not invest. To react, not reflect. To protect, not prosper. In the wild, overreacting to danger meant staying alive. In the market, overreacting means selling low and buying high. Let's break it down. When you see your portfolio drop, your amygdala, the part of your brain wired for fear, lights up. It screams, "Do something! Fix this! Get out now!" And when you see everyone else making money, your dopamine system kicks in. It floods your brain with the urge to join the party before it's too late. This is why logic loses to emotion. Why long-term thinking gets hijacked by short-term panic. Why someone like Michael can be disciplined for 10 years and still throw it all away in a weekend. Because we're wired to seek safety and excitement. And building wealth requires neither. That's why wealth isn't just about strategy. It's about psychological defense. You need guardrails, routines, mental habits that protect you from yourself. This is what separates investors who make it from those who don't. Not intelligence, not background, but the ability to recognize their own blind spots and respect them. Because once you understand your own wiring, you can stop reacting like a caveman and start thinking like a strategist. Up next, we're uncovering how the wealthy quietly protect themselves from financial destruction, even when they take big risks. You'll see exactly how the one mistake that can ruin your finances shows up in everyday decisions. The good news? It doesn't have to be your story if you master this one habit. Here's the part most people miss when watching the rich take big risks. They look fearless, but behind the curtain, they've built a safety net so wide they can fall and still land on their feet. Because the wealthy don't just manage money, they manage downside. Let me explain. They use something called a margin of safety. It's not just an investing principle, it's a lifestyle principle. Warren Buffett talks about it all the time. He doesn't invest unless there's a cushion, not just a chance of success, but room for error. Because even billionaires know the truth. Things go wrong. Plans fall apart. Black swans exist. Here's the key difference. The average person takes risks and hopes they work out. The wealthy take risks knowing they could go wrong, and they're prepared for it. The wealthy take risks knowing they could go wrong, and they're prepared for it. They diversify. They never bet the farm. They build cash reserves, own boring assets, and don't chase every trend. Why? Because they know what we've been saying all along. So they build in buffers. They use patience as protection, and they never let a single decision hold the power to destroy everything they've built. And the beautiful part? You don't need $1 million to copy this. You just need to ask yourself one question before every big move. If I'm wrong, can I recover? If the answer's no, you don't do it. Coming up in our final mistake, I'll show you a dead simple checklist to catch wealth-destroying decisions before you make them, and how to never be caught off guard again. Let's be honest, most people don't lose their wealth by accident. They lose it by ignoring the warning signs. And deep down, they usually knew something felt off. They just didn't stop long enough to ask the right questions. So here's what we're doing now. We're building your final defense system. A checklist so sharp, it might just save you from your future self. Next time you're about to make a big financial move, stop and ask. Am I making this decision out of emotion or strategy? FOMO, fear, pressure. These are red flags. If you can't explain the logic calmly, pause. What's the downside, and can I live with it? If the worst-case scenario wipes you out, it's not a risk. It's financial roulette. If this goes wrong, what happens to my future self? Future. You deserve the same protection you'd give to your child. Don't leave them to clean up a mess. Have I slept on it? One night can bring clarity. If urgency is part of the pitch, that's the trap. These 4 questions aren't just about avoiding disaster. They're about building resilience, because wealth isn't just about growth. It's about protection, reflection, and intention. You don't need to be perfect. You just need to avoid that one decision that could take it all. You've worked too hard, you've come too far, and you're smarter than the shortcut. So now that you know the one mistake that ruins your finances, ask yourself this: will you be the exception or the lesson? You've just spent the last few minutes walking through the kind of story most people only realize in hindsight. The story of how one bad decision can ruin years of wealth, and how it happens to smart, disciplined people who let their guard down for just one moment. But here's the good news. Now you know better. You've seen the signs. You've felt the caution. And if you're watching this far, I know one thing about you. You're not just interested in wealth. You're building it with intention. And intention? That's the antidote to regret. Remember, wealth doesn't belong to the boldest or the smartest. It belongs to the ones who protect their progress, even when the world is screaming, more, faster now. So the next time you're tempted to chase a flashy opportunity, take the shortcut or bet it all. Pause, breathe, and ask yourself, will this decision move me closer to freedom or put everything I've built at risk? Because at the end of the day, your wealth isn't just numbers. It's time, it's freedom, it's legacy, and some things should never be gambled, no matter how good they look. Now you've seen it. The question is, what will you do differently? If this video hit home and you're committed to protecting what you've built, I highly recommend watching my next video, which is the perfect complement to this one. Don't hesitate to share this video, subscribe to our channel, and share your thoughts in the comments section. Thanks for watching, and I'll see you in my next video. Until next time, keep learning, keep growing, and remember, financial freedom isn't a dream, it's a strategy.